Good evening, everyone. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations for INFOLLION Research Services Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first half of the financial year 2026. Now, let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Gaurav Munjal, Managing Director, Mr. Varun Khandelwal, VP Strategic Initiatives, Mr. Abhay Sangal, Business Head NAMR, Mr. Abhishek Jha, CFO, and Ms. Megha Rastogi, CS and Compliance Officer. Without any delay, I request Mr. Gaurav Munjal to start with his opening remarks. Thank you, and over to you, sir.
Thank you for the intro. Thank you for the intro, Purvangi, like always. And thank you for organizing this, Valorant team and our own INFOLION team, Megha, Abhishek. So a quick overview. So this first half of 2000 FY26 went pretty much according to expectations. It has been on a long-term trend. So we averaged about in the range of 40% of growth, which is we have been doing for almost since 2020 now, or maybe 19. And we managed to expand uh, in some newer geographies, especially US. But in addition to US, we have also started exploring other geographies, which is especially Western Europe and Middle East. In fact, we have also started to think about Southeast, although we haven't really taken too many. We haven't really taken not even baby steps yet, but we've started to think about it that we might go in a lot of other geographies. It is relatively easy to expand, although the market size is much smaller. Our prime focus outside India is still US, amongst other expansion initiatives. Um our US thing seems to be working well. We've already disclosed it is on an uptrend. The size of the team is I think the highest till now, and it would have crossed about 35, 40 people, or maybe more actually. We'll share the exact numbers. Besides that, Huxa is now out of the blocks. Huxa, which we started as we kind of used Huxa as a placeholder for everything long term, which we had at the time of IPO defined as PEX panel. Now we call it as an umbrella term, everything besides calls, anything which involves longer term engagements has now been classified as Huxa. But more specifically, it is targeted towards corporates as opposed to consulting and investment funds. We have done lots of courses, acquired lots of logos. We have been posting regularly about them on LinkedIn as well. And we believe that this is one area where which would give us an additional market, not just organic expansion. It would open up a altogether different market, which wasn't open to us 2 years ago. So this is one area in the longer term which we are betting on. Besides that, we took a few AI initiatives. I just discussed it during the annual AGM just a few days ago. So I'm in the interest of time, I'm trying to skip over that. There has been no major change since the last 2 weeks. So we have done a small marketplace of sorts for AI agents for research. We have just launched a beta phase. We haven't launched it in the open market right now. We're doing a lot of stuff. So one interesting thing which we did recently was filed our M&A and EIR policy. It's not that we are aggressively going ahead and doing M&As or anything of that sort, but we have given a framework of sorts, at least what are the areas we are interested in. We are hoping some investors will also help us out in those areas, but we have listed down some of the areas, especially marketplaces. Gig marketplaces, of course, is one of the main ones. The highest priority in that was a geographical or a domain or a complementary expert network in a complement expert network in a complementary geography or a domain. Other kinds of white-collar gig marketplaces, specifically for AI tasks like tagging, annotation, and there are lots of specialized AI tasks, any kind of RLHF. We are exploring those kind of marketplaces. Besides that, we've just listed down all the initiatives which we have taken in the recent AGM. Uh, on a financial front, pretty happy how it has panned out. I'll pass it on to Abhishek to share the details. And
Yeah,
that's it from my side. I'll hand it over to Abhishek.
yeah. Thanks, Gaurav. Good evening, participants. Thank you so much for attending the post-earnings call. A very happy Diwali to all of you. Coming to the results, INFOLLION delivered a strong performance for the 6 months ending 30th September 2025. So the revenue grew by 46% to 52.67 crore compared to the same period last year. EBITDA increased by 21% to 8.67 CR, and PAT rose by 23% to 7.30 crore. And also, we had a positive cash flow from operations, rupees 4.27 crores. So that was the summary, and detailed are already there on the NSE. So thank you so much.
Thank you. We will now open the floor for Q&A. A request to all participants to kindly raise the hand icon, please. Yes, Ms. Shalini, please go ahead. Ms. Shalini Gupta?
I think she's on mute.
Mr. Tej Patel, please go ahead.
Yeah, yeah, hi, am I audible?
Yes, sir.
Yeah, thank you so much for the opportunity and congratulations, good set of numbers. But I have questions on margins first. Our gross margins have been dipping, quarter on quarter. So I just wanted to understand, is it primarily led by discounts given to the existing customers or what is the reasons behind this dip in margins?
There are two, three aspects to it. I don't think it will dip significantly. I think gross margin from last, it should be about 2-3%. In absolute terms, it's a number which is less than a crore. There are two aspects to it. One was technical aspect. The some part of it, in fact, substantial part of it was due to auditor change who had some kind of different opinion on how to classify it. So we have some prior period income and expenses which has been adjusted. We'll share the details. Abhishek will probably share it, or we will share it in the annual report. But there is no material impact from them. Besides that, no, we are not giving any discounts to existing clients. In fact, we're probably doing a fair amount of what we call as CD calls or corporate development calls, especially in newer geographies and newer kind of clients. In the so that's it from my on it from my side. I think it is about the precise number is somewhere around 1.5 crores. So you can assume that probably for 10, 12 lakh or maybe even lesser kind of calls are given as development, especially in newer geographies, which we share with new partners. So whenever we go into a new geography, we announce internally to our clients that if you want to evaluate us, why don't you, take the first two calls free in a project, and things like that. So we've gone a bit aggressive. Having said that, we're very comfortable with the profit margins at this stage, especially the PAT margins. We we've been maintaining for a while that if at all we can afford, we would definitely keep the margins stable and become more aggressive towards our clients. So we might not have increased the margins, although we still have leverage to increase, but we have no intention to increase in the near future. uh, I would say it is a more of a business call. We want to dominate the existing market much more, without leaving any scope for anyone to bargain. Uh, Having said that, we are still maintaining the per person calls at a much higher level than our peers. So while at a percentage level it might seem very significant, but in absolute terms, I think it can be explained by barely a crore or crore and a half.
Got it, sir. And this, I'm really sorry. What you were showing this adjustment one, if you could just, help me understand this.
We will share the details. There is no
Okay,
material
okay.
impact on it. There is
Got
no
it.
material impact on the overall working of the company. It is just previous year to this year. The auditor had a different view on how some of those were supposed to be adjusted. So some income and some expenses have been changed from last year. We'll just share it with you. But there is no material impact from that perspective. The
Perfect.
only material impact is that we have given a few CD calls. If you exclude that, I think the margins would be pretty much similar to the last half, or probably even better than last half.
Got it. Got it. Perfect. Thank you so much. And sir, we have seen, there's intangible assets under development. So, if you could just throw some light on, what are
Similar.
those?
I mean, let's keep the financial questions apart. Let's keep the operational questions apart. Let me just address the operational ones. Abhishek will take care of the financial ones, or we will share a note. Again,
Okay.
from what I understand, it is again a same part of similar new auditor
Okay.
opinion.
Okay. No problem. No problem. You touched upon that US expansion, briefly in your intro. If you could just talk about more, when we can, kind of start having incremental. You already shared about the team side, but if you could just, help us understand more on numbers, where,
So we've already disclosed in the last AGM. I said that it was almost more than a quarter of our calls are now coming from US, and it is on an uptrend.
Okay. Okay. Got it. And on Huxa also, you said, it's out of the box now, and you are, so,
Yes, so we
because
will maybe not now. Half year is not the right time, but I think at the end of the year we should be able to disclose some numbers. We have been adding a lot of logos, and we have shared regularly on LinkedIn on the kind of logos. Some of them are
right, right.
very large corporates within the country.
Got it. Got it. No problem. Perfect.
So we
Thank
are
you so
happy
much.
with what's going on there.
Okay, no problem. Thank you.
Thank you. Our next question is from Mr. Bhavik Nara. Please go ahead, sir.
Hello,
Mr.
am I
Bhavik?
audible?
Yeah. Yes.
Yes. So firstly, just wanted to make sure, like you said, the gross margins impact was not due to we were giving any discounts, right? It was the discounts are still in level to what we did before.
I don't know where the discounts are coming from. I mean, it has got nothing to do with discounts, and we have been fairly stable on that front. Maybe we do give out some volume discounts for our, regular old clients who give us a very sizable volume on the same project. But that's something what we have been giving for a very long time.
Okay, so it's not because of that. Okay. And
No,
second,
not at all.
okay,
There has been no change in the current Indian client setup.
okay. And second, I wanted to understand first the business model that we're running. So like there is some gap between the when the call is made and when the invoice is registered. So just can you help me understand the billing cycle that we operate on?
I think again that's a revenue recognition and expense recognition thing, right?
Yes, just wanted to understand like if when the call has been
So
made,
again, I would
the
say this is a financial kind of a question, which is very similar to the gross margin and the
no,
readjustment
actually, I
of.
just wanted to understand the billing cycle, like once the expert are paid, whereas for us
So we
the
typically
invoices,
tend to
yes.
pay an expert within 2 to 3 days, or sometimes 4 to 5 days, as
Okay.
soon as the call is confirmed from the client. And we do regular billings with the clients. With larger clients every 10 days, with mid-sized clients every 2 times a month, and with small clients once a month. Some part of the same business is actually subscription based.
Okay, so some part of these is subscription based. So is it dependent upon the clients that we're serving? Like some clients just usually go
Yes,
on
yes, it is
transaction based,
dependent on
and
the client.
so like what kind of clients prefer like service based? Like can it increase in the future or be anything meaningful?
Come again?
Just wanted to understand, can the subscription part portion of the revenue can be meaningfully increased or like depends upon
No, it
will stay a
see
minor part?
with small teams, especially financial teams, it tends to work on a subscription basis.
Okay.
So yes, it helps us in the cash flows. So we always try to increase that. Having said that, the financial part of business, especially private equity, has grown for us much faster than our rest of the business.
So, okay.
Mr.
And
Bhavik, I
any
request you come back in the queue, please.
okay.
Thank you. Mr. Shubham Jawar, please go ahead.
Yeah, hi, am I audible?
Yes, sir.
Hi, Gaurav sir. First of all, congratulations on the result and happy Diwali. I see the entire team is in ethnic wear today. So
Yes.
yes, the only question that I have is, out of the total experts call that we do, what would be the percentage of CXO level and what would be the percentage of mid manager level calls that we are doing?
Ah, that's a tough question to be answered top of my head. But at last count, we had roughly 2,000 CXOs and about 5,000 6,000 executives uh, from a total of about 100,000. Actually, the last count I think was around 80,000 when we had these numbers. At the time of IPO, it was probably 1,500 and 4,000. Now it should probably be around 2,500 to 5,000 6,000. How many of them are actually used on each calls is something I do not have top of my head right.
So what would be the gross margin profiles between the CXO levels and the mid manager level? Sorry, you're on mute, I guess.
Not too much of a difference.
It's mostly the same only, the entire like 40-45% is the
Yeah,
gross margin.
broadly similar, broadly similar.
Got it. Yeah, that's the only question, yes.
Thank you. Mr. Gaurav Nigam, please go ahead.
Yeah, hi, Gaurav. Thank you, and wish you a happy Diwali in advance, and the entire team. My first question was on. I think I joined a little late. You had explained this gross margin decline. I wanted to understand this point a little better. I could not get it. I think you tried explaining. They said almost a year-on-year decline of 5.6% on a quarter-on-quarter of 2.6%. Can you please explain? I could not get the answer clearly.
Okay. I'll just share it again. So 2.6% practically translates to about a crore, right?
Hmm.
So, or maybe a little more than that. Roughly some percentage of it, majority of it is due to the reclassification as suggested by the new auditors, where we had to some prior period expenses and income. Abhishek would explain it better, or we will share a note after this.
Yeah,
Uh, and the rest of it, I think we have gone a little like for the last, I would say, year or so, we have gone a little aggressive on CD calls, which we called as development calls. So it would barely translate to a few lakhs per month. So I don't
this
really,
would
I
be
mean, I know in percentage terms it seems a lot, but you have to also see that the base is really low. So instead of hiring a full-fledged person in all the geographies, it sometimes it works far easier that you circulate an email in that respective geography that we are giving you, a few CD calls. You can adjust them into your main project. So that kind of helps us in some cases. With our existing clients, existing India business, there has been no change.
understood. Just I'll wait for the clarification whenever it comes out. And
Having said that, even if we take care of all of them, it would amount to roughly 1.5 2 crores.
correct, correct.
So
And
in absolute terms, it is not a very big amount. It is probably just the salary of one US guy. So
correct,
that's how we evaluated it. You rather give CD calls to 20 partners than have one person if you're not ready for it.
correct. And this CD calls would be entirely for the US market, right? Just to understand the same
No,
question.
wherever we feel appropriate.
Okay.
So the sales team has got some leeway on that. Wherever they feel appropriate, they kind of go ahead and do it. But it is not a absolute. Technically speaking, it can be classified as a marketing expense, but we don't classify as a marketing expense because it is usually a part of the project. So it
Correct.
shows up in the gross margin. But if you wish, about let's say about a few lakhs a month can be pulled out and segregated and classified as a sales slash marketing, but we rather prefer it as a operational expense because once we get a toehold through a CD call, it's much easier to do follow-up calls.
Absolutely. Understood. And just a quick follow-up and a suggestion on the prior period items that you mentioned. It would be great to get a sense that whether this is repeatable in nature or it is the only.
No, there is no material impact. It is just a reclassification. Uh, so certain part was done earlier, which both expenses and income would be carried forward. So from a longer term perspective, it has got no material impact.
And this is not even repeatable. So this was a one time only.
Got it. Okay, understood. And just one question on the other expenses. I can see on a year-on-year increase on the other expenses close to 75%. I mean, what does it pertain to? Yeah, I will tell you the exact amount. So almost other expenses has gone up from 1.4 crore last year H1 to 2.5 crore now. Anything? What is this
I
expenses?
haven't really, again, absolute numbers are not significant, so I'll have a look. So 75% is definitely doesn't reflecting it because it is such a small base. But I think Abhishek would be able to
Yeah, these are
add
basically
it.
the admin expenses like rent, some kind of software
We
expenses that
shifted
we.
office, maybe that's why. So
Yeah,
we have.
Okay. Fair enough.
basic admin expenses are there.
Okay, understood. Thank you and all the best. Thank you.
Thank you.
Thank you, Gaurav.
Mr. Salil Chitale, please go ahead. Mr. Salil? Okay, so our next question is from Mr. Kumar Divyanshu. Please go ahead, sir. Mr. Kumar Divyanshu.
Hello, am I
Yes, sir.
audible?
Yes, please go ahead.
Okay, thank you for the giving opportunity. Have a very good set of numbers. So I only have two questions. Like in the first question, I have please tell me what about the order book till yet? Order book. As of September 2025, what is the order book till now you are having?
Okay.
Uh, Order book.
And
Then
what is the second question?
like first question, I am having four parts. Just I'm telling. Order book. Then please tell about the clients, capex, and who are your competitors, and why the OPM has reduced. Like this quarter from the previous quarter, the OPM has been reduced this time. So please comment on that. And the second part is consist of like what is the amount of the order executed till now, and what is the order inflow status, like pipeline, if you're having order or not.
I'm not sure if order book is. I mean, we don't get like long-term projects. We just have long-term clients who give us lots of short-term projects. So I'm not sure how to answer the order book questions. OPM, I've already discussed it in the previous three answers, and competitors, peers. So there are three or four global peers who are somewhere in the. We have already shared it in the DRHP as well. There has been no major change in peers. There are three or four Indian peers. There are four or five global peers.
Could you please
Uh,
name it?
all of them are there in our presentation and the DRHP, so, along with the numbers. So you can just have a look there.
Okay. Okay, and this time I was going through your presentation. In that, I found that revenue and the EBITDA margin has decreased in H1 FY26. Could you please mention the reason behind that?
We just discussed it in the previous one. So there has been no significant increase. We have done a few CD calls from our existing clients. It has been it has been pretty much stable, and there were some part of it which was reclassification.
Okay, and the last question, like debtor days is increasing, like your debtor days is increasing from the cash ratio segment.
No,
Will
debtor
it?
days have been very consistent in about 75-80 range for a very long time. This is
Will it decrease or not? Like any plannings
See,
there or not?
No, but is it decreasing or will it decrease? I mean, they're two separate questions.
Like, just tell me that it is increasing debtor days. Could you please comment on that?
No, but it is not increasing, no? They've been consistent for the last whatever, as long as I can remember. So can I know what is your calculation?
I was going through the your presentation likewise, so that's why I observed it. Okay, let me check this once. Okay.
Because as far as I know, they're very consistent at around 75-80.
Acha, okay. Okay, thank you so much. Overall, the management is quite confident or not? Like, likewise, if you can tell, like, what is the future planning or likewise anything?
Any specific questions? Matlab, anything on specific?
Gaurav sir, I suggest we move on to the next question. We have quite a few people in line.
Sure. Thank you, Devanshu. You can just drop in the questions and we will answer it offline.
Mr. Krishnam Saraf, please go ahead, sir.
Hello. Yeah.
Yes, hello, sir. You're audible. Please go ahead.
Thank you so much for taking the time and happy Diwali to all of you. I have a more of a strategic question. So currently we are at a revenue of 80 to 100 crore top line. How do you truly achieve scale in a business like this? Like what is the vision to go from this to say 800, 900 crore over the next few years? If you can talk a bit about that.
Well, in our core business, which has already been established and working with the current margin profiles, etc., it is a fairly limited business, right? So we have been trying to expand into peripheral areas. We've already disclosed what are those areas which we are trying to expand into. L&D is one segment. There are down the line further growth areas within L&D, which we are trying to do. We can move into EdTech and stuff. But essentially, what we are trying to do is use our existing supply to expand into peripheral areas or adjacencies, which we think has been going fairly well. I'm not sure how soon or how late we can go to 800, 900 crores or whatever that number. But the Indian market is not that large for the core business. But globally, this is a sizable market, and we believe we are very well positioned to capture a significant chunk of it.
Got it. So is the priority right now to go with our core offering abroad or go into peripheral services within India?
Both. So we are expanding our core business within India, which is growing at a very healthy click. We're very happy with how it is growing. Some part of it, especially the supply side, is being sourced a lot from outside India, which is experts. Again, you can find that number in the number of international payments which we have done. It should have crossed quarter, in fact, probably more than 30% now. And peripheral areas, we have already shared that what are the new initiatives we are trying. I said that in the opening statement during that as well, which is L&D.
Yeah, got it. And in the
Excuse
just
me.
one last question, and in the core business that we have, is there any differentiator that we have as compared to the many other players that are there, or is it just purely based on cost and promptness of service?
No, so differentiator, we have already explained multiple number of times that we are structured in a much different way. We go far more deeper into the tech side. We do almost 2 times of our calls per person compared to our peers. And primary reason is that we use a fair amount of tech, use a fair amount of tech both to do to discover calls and since we are structured very differently from our peers, that we are structured at a domain level, we have far more deeper domain access than just sales. So that's how we have been doing it. And if we are able to identify specific areas and specific domains within the US geography, we should be able to crack that geography, which we have already doing it, and we are reasonably happy with how it has panned out.
Got it. And any 5-year aspiration
So I
in terms
request
of
you to come
number?
back in queue, please.
Okay. Oh,
Thank you. Mr. Bhavik Nair, please go ahead.
Hi, I just wanted to ask what kind of revenue are we generating from international experts to Indian clients?
As I said, the last disclosed number was a quarter, but you can go into the details. We always disclose the payments done to domestic experts and international experts. You can have those ratios readily available.
Okay, and I just want like the forward-looking statement, like what kind of growth are we expecting, like in like 3, 4 years? So like
We have
as you
never
said,
ever given any forward-looking statement as of now.
yeah.
Although we have disclosed, although we have discussed in depth how we see the market growing, but you can assume that how consulting firms grow, and we are a derivative of that business, and how private equity slash large public market funds spend on research, we are a derivative of that business. So as and when those spends increase, that's the organic growth which we will get. Since we were not very well represented in the financial world, we kind of gained a bit of market share over there. So we should be able to do better than the just organic growth. For inorganic, we are already trying outside India, and we have already shared what are our target areas where we are trying inorganic growth. Outside India and organically, again, US is one of our primary markets, but we have also started making our presence felt in Western Europe and MENA.
No, understood.
Thank you. Mr. Shikhar Munda, please go ahead.
Hi, Gaurav, just one question. So, are we generating any revenues from US clients as of now?
Not too much. It is pretty small right now.
So, I
But
mean,
we have started maintaining presence for at least for the last 3 or 4 quarters. We have been traveling regularly to US. It is on an uptrend, but not material enough.
okay. So, I mean, are we finding it very challenging to, get make that number to be something material, or are we, as in, is there
See,
some kind of entry barrier there?
I've explained that even at the time of IPO, during the previous AGMs and during previous earning calls. So this is not a business where you can put in a lot of sales team and then expect uh, growth to follow, because you need to have a network. So it goes hand in hand. So we have built up a very sizable network. We would have crossed 10,000 by now, uh, and that's how we have started gaining market share on the other side as well. Compared to previous years, we are obviously much higher. Compared to the India numbers, we are not there. But from India to US numbers, we have a very sizable number. I would not say it has been challenging or anything. To be honest, any marketplace business, initially it goes slow, and only when you are able to connect the relevant guys, it works. Now, if we scale up our marketing efforts or sales efforts ahead of time in US, it would only result in a lot of CE calls. We may not be able to do the numbers, well, it will not be a sustainable thing. So we want to go hand in hand from both from a supply and a demand perspective.
Got it. Thank you, and all the best there.
Thank you. Mr. Rajesh Chen, please go ahead.
Hi, thanks for the opportunity. I have 2, 3 questions. So you mentioned that corporate development calls, the CD calls, had an impact on gross margins, right? But I mean, these calls are free calls basically, right? So they will not reflect in the revenue, right?
They will not reflect in the revenue, but the expense will, right? So what we do is, these are total revenue by total expenses done on experts. So if the first two calls of a particular project are free, which gets adjusted over the relevant thing, so it reflects into the one. But on a call-to-call basis, it will not have an impact.
So are you saying that you would not have got the revenue from the client, but you would have paid the experts?
Exactly.
Okay.
No, so
Okay.
these calls are being done. These calls are being done, which in the hope that down the line we will get more revenue.
Yeah. Okay. Okay. And there are some hearsays in the market that, especially with respect to your Indian presence and the Indian experts that you have on board, that by the time that the experts receive a call from you, they would have already received the call from other platforms and they would have already, accepted the call from the other platform. So, what is your comment on that? Have you noticed such a thing?
I can't comment without data, but I mean, you yourself mentioned it is hearsay. No, but it doesn't work like that. I mean, thanks for pointing it out that we're not as quick, but I can assure you our stats are as good, if not better, than most of our
Yeah,
peers.
because in fact, two, three contacts who are my not my direct contacts, but you can say second level or third level connects. So they have pointed it out that some projects or inquiries they received from INFOLLION was a bit delayed, and they already received similar inquiries from other platforms, and they already accepted on those platforms.
I can't comment on that. I don't really have
Okay,
data.
okay, no problem. Okay, no problem. And which are the industries in which you serve your clients? I mean, where do you see the demand coming from? Which industries? And why is the demand repetitive? How do you ensure that your target customer does not collaborate with your expert directly in future?
This is a fairly well discussed answer. I would still quickly address that, but in previous transcripts as well as the DRSP ones, I've explained it very clearly how we position that. So one, it is essentially a reflection of Indian economy. The Indian business is reflection of an Indian economy. BFSI, IT services, life sciences, CPG, retail, etc., is roughly 40% of our business. Manufacturing, chemicals, capital goods, etc., would be around, all put together would be around single digits, etc., etc. So that's how it is. Your second part was, will they go direct? Sometimes they do, sometimes they don't, but we only focus on cross domain short-term businesses where the value which we deliver is far more than the money they will save on that. So this disintermediation we have discussed in fair detail earlier. I would recommend you to refer to that. For others might have already gone through.
Okay, but can you start publishing the industry-wise
So
breakup
I
in your
request you
presentation?
to come back in the queue,
Yeah, it's
please.
just a suggestion. It's just a suggestion. It's not a question. So,
So we've already published now 60%. It is bang there in the DRHP.
no, in the investor presentation, in the half-yearly investor presentation, because it will keep changing, right? It will keep changing.
Not really. It doesn't change too much, to be honest. I've been saying this for almost 2 years, and it is still within the plus minus 1 or 2% range on each domains.
Okay, okay, okay. Thank you.
So
Thank
investor
you.
trends change, yes, but for us, detailed discussions, it's very minimal change.
Okay.
Mr. Rohit Balakrishnan, please go ahead.
Yeah, hello. Am I audible?
Yes, sir.
Yeah, hi Gaurav. Happy Diwali to you and the team. Uh, Gaurav, just one thing on your investments in AI. So, uh, in terms of like, I was going through some of the global players, and they have been talking about a lot of stuff that they're trying to do with AI, and they're trying to sort of, in a way, relook at this whole business in itself, like what AlphaSense is trying to do, etc. So just wanted to get your view. What is it that you are doing, or what are your thoughts on this?
Fair enough. So again, this is AI thing. We just had it in the last AGM, but I'll definitely take this. So we have always positioned ourselves as a business where research which has already been done is added upon by research which has never been written down. Now, we don't see AI as a magic wand for our business, neither for our other clients or for other peers. It is just a very smart way of deriving insights from unstructured data, which is widely available, right? But if you have a look at most of our projects, they do not ask for basic data, right? If you happen to speak to any consultants, the basic research reports, Bloomberg, even AlphaSense, all these subscriptions are already available to them, right? So we are not in the data slash report slash information services, written information services business, right? So that's a different business. Good or bad, it's a different problem. But we are not in that business. We are in deep insights. That's point number one. Second, you mentioned various AI use cases. So we have been trying that. In fact, the core expert network slash AI offering of AlphaSense, I don't think it is. It is directed more towards shallow public market research as opposed to in-depth consulting or private equity research. So our business remains different. People have tried using it. In fact, there have been more failed examples than successful examples on the on that front. In a one-line answer is what I believe is that the half-life of old transcripts does not justify the transcription cost. So when you subscribe that to for the first time, it feels very overwhelming that you get a lot of data, but most of it is shallow data. A 3-year-old transcript or even a 2-year-old transcript is much more shallow in terms of understanding of the business than the past 4 con calls. So what happens is you need to keep subsidizing and having a larger and larger pool, but the incremental pool cost which you spend on the pool is not justified. So that's what we have observed. We have done that business. We have experimented with the business. At this stage, I don't think we will go into the transcripts or deriving insights from publicly available transcripts and ours business. Having said that, we have a beta offering which we have been experimenting with a few clients where we have aggregated lots of research agents loaded up with their primary data. We have given them some uh, sources of prop data which is publicly available where they can fetch those sources from those sources, and some we are trying for some paid prop data as well on a pay per use basis. So that is one experiment we are doing. What we believe is that that's a report writing business. That's a very different business. One, I don't see too much of impact on us. Neither we can impact them. Our business is just an add-on to that business. So what we have done is we have released our APIs for finding experts. We have tied up with a few research companies like that, and uh, all we can say is that we are experts would be searchable through external APIs if at all that matters. Doing or adding value through our own transcripts uh, uh, from publicly available data, I don't think that's a very lucrative business.
Got it. That okay, fair enough.
I mean,
I think
that's my perception. If
sure,
it pans
sure.
out, we would be happy to pick that up. We have enough repository of transcripts.
Sure, sure. The other question was in terms of your, I think in the last call, I mean, and I think in this call also you mentioned to a previous participant that you're growing faster in your financial services. So any sense what is the contribution that financial services is now to us in terms of the revenues?
So I think I answered that in the previous one as well. So there is a gray area because a lot of financial services clients sometimes bill us through consulting firms, and some
Consulting
consulting
projects.
firms do it through our
Right,
financial
right, right.
clients. So there is no very a very strict answer to it. But at an overall level, we have seen it improve. I mean, that's the best I can say right now. It will be very difficult to segregate it into clear numbers, because a lot of these due diligence projects sometimes comes through us through consulting, although they get billed directly, and vice versa.
Got it. And for you, when you are looking at your expanding the market within India, like in terms of your, so of course within consultants, I mean, I understand how that works, but like, do you have like a, uh, uh, and of course, I think private equity also uses a lot of the consultants also, especially during due diligences. But like with this whole mutual fund and the whole public markets boom that has happened, I mean, any thoughts on the penetration there? Have you gained some market share, or has that segment picked for you?
I'm sorry, which specific segment? The public
No, I'm
market
saying
is.
public markets, yeah.
See, public markets is a very small part of export networks in India. I mean, I would all inclusive. My sense is it will be in single digits or even lower across all players, right? So most of it is so about 60 odd percent or is about consulting. Private equity is about 20 odd, or even higher, 25, a quarter of it of sorts, and then uh, public markets would be about few single digit percentage, and corporate would be a few single digit percentage. So for large public market clients, we haven't really gone too deep. For small clients, again, we are trying to find a way, but as of now, uh, aggregation or demand aggregation is the only way. And what we try to do is collect a lot of them and answer in a pooled way. But otherwise, the market in itself is not very large.
Got it. Okay. Thank you, Gaurav. All the very best and happy Diwali to all of you.
Thank you.
Thank you. Ms. Sonal, please go ahead.
Hi, this is Sonal.
Oh,
Hi,
sorry,
Gaurav.
sir.
Yeah.
Hi, Sunal.
Hi. Yeah, sorry. Yeah, it's usually confused that way. Gaurav, happy Diwali to you and your team. I have two quick questions. First one, you were talking about the BD calls that are being done, which was contributing to a little bit of dip in gross margins. From a tonality of these BD calls, are these being done more in US, or these are being done more to financial services clients? Is there some direction you can give around that?
Mostly outside India, the clients which we have who are global clients, instead of sending people to various geographies, we just try to circulate within them that if you are interested to pick us up in a project, we'll give you the first two, or we'll waive off the charges for the first two, something like that. So yes, primarily US, but the impact of it will come down the line.
Understand that. Second part, like I think you mentioned in the earlier part of this call that the US revenues are growing, but they're still very small. I wanted to understand, like, what are your operating milestones for the next 6 months, next 12 months for the US business? Like, bottoms up, what do you want to see from an operations perspective in the US? If you could share that, that will just help add some color to the
Perfect.
story.
So, from a export perspective, so we recently set up our subsidiary in US. We have, gained a fair amount of comfort from US experts because of that. Because now they have something which is local and the payment is coming locally, so that helps. Uh, at some point of time, as of now, we are maintaining a presence of about a month every quarter in US. At some point of time, we would like to maintain a permanent one. We are actively looking at various ways, both organic and inorganic in US. Operationally, we don't have a very specific milestone, but let's say at a sizable number where we can justify the cost of a salesperson of, let's say, a 1.5 2 crore kind of a cost. Uh, we should be able to hire permanently. While we still have the money to hire right now, but I think it is a bit premature and we might not derive the key value. As of now, we are more focused on traveling more often. Maybe a year or two down the line, we would probably hire full time. I mean, but is there a very specific number? I am not so sure. We have already thought through that.
No, I understand that. So it's still early days. Basically, if you
Yeah,
still
early days.
thinking
So
about
early days is the best part. From a network expansion point, it is pretty much on track. We are getting the numbers which we wanted. We were going as per what we had intended.
yeah, because if you're still thinking about whether I should hire a senior high cost sales guy, then we're still a little far away from
Yes. I've never denied.
going aggressive on BD or let's say
Yeah,
sales
so
outreach.
once we have it, see, once we have maybe about 50 to 100 odd touch points, only then it makes sense to have a business person. You can't have a business person doing 1 or 2 touch points every month.
No, Understand.
It just doesn't make sense from ROI perspective.
Understand that.
You rather
Can-
spend 5-7 lakhs through some other sources, and which we believe are likely to have a higher ROI.
No, understand. There are a lot of hacks you can do, basically, tell them, basically. So, two suggestions, Gaurav, if I may make for disclosure for the deck. One was if you could share free calls being made on a half yearly basis as you disclose your calls. And second, total paying clients that you have, if there is a line we can draw on a half yearly basis, that will just help add some color to the disclosure, if you can.
We'll
Sure.
take that. We'll
Sure.
disclose that in the next earnings call.
Sure. Thank you. Thanks a lot.
Thank you. Mr. Arnab Bhattacharjee.
Hi, happy Diwali, Gaurav. I had a small question. Just wanted to understand how you. I will just like one will be, in terms of development, probably you will be looking at developing your platform in the current context plus utilities. When I say utility, it can be automation plus AI driven, whatever efforts you are working on. I sort of want you to tell me how will you segregate, like how much of allocation in terms of efforts is going into building automation plus these tools, and if you could also give where do you think AI comes in, because I think you just explained that it doesn't directly come into just uh, taking a read
Correct. I get that.
yeah.
So
And I'll add one more question. Is it fine or you want me to wait?
yeah, go ahead, go ahead.
Yeah.
If it is similar to AI, then I'll do that.
No, it is not similar to
Okay,
AI.
go ahead.
Yeah,
Let's do
sorry.
that because there are
I
a lot of
also
hands
wanted
I
to
can see.
understand how you guys pair. So basically, when someone approaches you for a consultant, how does the workflow looks? Do you have an algorithm which sort of finds a match and then it happens, or when a customer comes to you, they're coming with this is the consultant that is with whom I want to get in touch with, and is there a hit ratio? Like, if it is possible to tell me, is that data skewed that you end up assigning a lot of requests to some consultants, and there are other people who get 0 or 1. If you look at a quarter data, how is that data skewed?
Perfect. So there are three questions. The first, the AI bit, from a use case perspective, I described that. From a initiative perspective, although I have disclosed that in just last month in the previous AGM. So we have been using a lot of AI for our own use cases, right? All our codes are from through with the help of Copilots and Git and all. From a we have kind of identified 2 or 3 pillars. One is we'll always remain within a human in the loop phase and have a prop data to back it up. From a financial perspective, we have figured out that we are not going to do any research oriented stuff on AI. We would rather have well, we would only do stuff where have a very clear visibility of ROI. So the kind of experiment which we did was on a pay-per-use basis. So you pay only, then you get. We are not trying to bulk it up. There is no VC money to blow for us, and we are not going overboard on that. Having said that, we will be doing a lot of experiments internally, both for our own use cases. We have already integrated our core VC chains with the vendor mapping and value chains with our core tech product, which brings me to your next answer. How do they discover? So there are 2 parts to it. Whenever we get a request from a client, we have our kind of algorithm which gives us some suggestion that these are some of the experts who have done these kind of consultations in the past, and this is the agenda which was captured last time. These were the answers which they shared last time on a intro basis. Then we have a discovery platform, which is again value chains, where we do our own research and suggest experts, which is again a semi-structured, which is a structured services kind of a product. And third is uh, I'm sorry, I missed the third question.
The distribution of your consultants, how in a coin, let's say I would look at the data, how many calls is one consultant getting? How does the graph look? How many, like, is it very skewed that some of your consultants are getting a lot of calls, and
Not really. There are lots of. I mean, you're basically asking how many unique experts, right?
Not really unique experts. It's more like
You want the entire
your
graph.
pairing ends up, yeah, the algorithm
See,
you are.
most of the calls are one or two calls only. Most of the experts are one or two calls. There are
Okay.
very few experts who would cross a very sizable number. In fact, that's what we take pride upon, that we are able to discover a lot of experts across a lot of domains through our tech capabilities.
Is it possible for you to put a percentage, of spends that you want to do in building utilities and let's say marketing? I just want a rough percentage. Doesn't have to be exact. It can be evolving. But let's say 5% on marketing, 5% on building
Don't
utilities,
have an
AI.
idea. I don't think I would be able to put a number to it.
No, I am basically more wondering, how much do you want to do experiments, and that's the whether you think it, as something which can evolve out of it is what I'm trying to say. It's like throwaway money. Yeah, it's not a return on investment, but it can be.
So no, we won't be doing too much of throwaway money from our existing coffers.
Okay.
So we would be doing experiments to the extent we have a very clear ROI from within our own tools, our research, etc. We'll spend a fair amount. Uh, but if we come across something from where a cost center can be converted into a profit center and we can offer those services to our to other clients, we would probably double down on that. In that scenario, maybe we may even invest. But it is such a dynamic environment on the AI front that I have absolutely no answer to it right now. That what kind of investments we are committing to it right now. To be honest, the kind of investments that are happening in AI, even from an Indian VC entry level perspective, the money which we have is minuscule. So there is no point. We can't even hire, you know, US kind of engineering or hardware power to do any kind of experiments.
No issues. Yeah, I hope if you ever come across, then you'll keep us posted.
If we see some interest, we'll definitely double down on it.
Yeah, thank you, Gaurav, and wish you and your team a very happy Diwali.
I've given a note on AI, the entire AI thing in my letter. You can have a look at it.
As this was the last question, I thank Gaurav sir, the entire team, as well as all the participants for taking part in today's earnings call. Wish everyone a very happy Diwali.
Thank you so much, Purvangi, for organizing this. Thank you, investors, for joining it. Wish you a very happy Diwali. The team is waiting right outside for Diwali celebrations. I hope each one of you have a great Diwali and a happy New Year and a very happy New Samvat. We can wind up the meeting, Purvangi, Megha?
Yes, sir.
Yes.